How is Edmonton setting the pace for rental affordability in Canada, even as rental rates rise? Welcome to the Multifamily Real Estate Insights Podcast. I'm your host, Sandy Mackay. Let's get right to it. Edmonton has emerged as Canada's most affordable major market for apartment rentals, despite a steady climb in rents over the past year. According to a report by Avison Young, Edmonton's robust rental market is primarily fueled by interprovincial migration, active investors, and new federal rules influencing multifamily housing. The city's rental rates rose from $1,529 in the latter half of 2024 to $1,573 in the first half of 2025, based on data from Urbanation and Rentals.ca. Despite this increase, Edmonton ranks first in national affordability among major cities, outpacing markets like Toronto and Vancouver, where rental rates range from $2,500 to $3,000. The report highlights Edmonton's appeal, citing its accessible rental rates and strong economic opportunities. These factors are attracting new residents and driving high demand for rental housing. Migration from Ontario and British Columbia is a key driver, with Alberta recording a net gain of 21,335 people in the latest figures. Housing affordability, cost of living, and employment opportunities are primary motivators for this influx. The report notes that residents benefit from manageable rents, offering greater financial flexibility, while investors enjoy strong demand, low vacancy, and consistent cash flow. The Royal Bank of Canada analysis points out that rents are falling in more than half of Canada's 40 census metropolitan areas compared to a year ago. Notable declines are seen in major markets like Kelowna, Calgary, Toronto, and Halifax, where two-bedroom unit rents have decreased significantly. Older walk-up apartments in Edmonton are proving resilient, offering cost efficiencies for tenants and stable returns for investors. Unlike Vancouver or Toronto, where older stock faces redevelopment pressure, Edmonton's walk-ups remain a unique competitive asset class, defensive in downturns, yet rich in value-add opportunities. With limited new construction of comparable low-rise products, these buildings continue to play a critical role in the city's rental ecosystem. For the first time since 2021, Edmonton's multifamily market saw sale prices per unit rise by over 6% for both older and newer buildings. Transaction volumes approached $1.2 billion in the first half of 2025, reflecting continued investor confidence. Additionally, the Bank of Canada's recent rate cut to 2.5% may offer modest relief for borrowers, though financing conditions remain tighter than in previous years. The Canada Mortgage and Housing Corporation's MLI Select program has been crucial for Edmonton's multifamily market, providing higher loan amounts and longer repayment terms. However, new underwriting standards as of July 2025 have tightened debt service coverage requirements and increased insurance premiums, especially for high-leverage projects. These changes have raised borrowing costs and made financing more challenging for some projects, particularly those relying on maximum leverage. The latest CMHC changes build on a series of policy shifts since 2022, further raising the bar for developers. Institutional Property Advisors, a division of Marcus & Millichap, has announced the sale of Christopher Village, a 114-unit multifamily asset located in Ogden, Utah. This transaction provides the buyer, Highland Partners, with a substantial foothold in a high-occupancy, supply-constrained submarket. According to Brock Zylstra, IPA's Senior Managing Director of Investments, Christopher Village offers new ownership and opportunity for immediate value enhancement through strategic interior and exterior renovations, as well as operational improvements. Danny Shin, also a Senior Managing Director of Investments at IPA, emphasized these potential enhancements as critical value drivers for the new ownership. Built in 1962, Christopher Village boasts a serene residential setting, complete with a resort-style swimming pool, a laundry facility, and reserved covered parking. Apartments are equipped with fireplaces, storage space, dishwashers, and air conditioning, making them attractive to tenants in the area. Marcus & Millichap, a leading national brokerage firm, specializes in commercial real estate investment sales, financing, research, and advisory services. As of December 31st, 2023, the company had 1,783 investment sales and financing professionals across over 80 offices, providing comprehensive services to commercial real estate buyers and sellers. Institutional Property Advisors, a prominent commercial real estate services firm in North America, integrates real estate investment and capital markets expertise with industry-leading technology and research. This combination offers tailored solutions for the acquisition, disposition, and financing of institutional properties and portfolios. In a notable transaction, Sally Development has sold its 527-unit portfolio in southeast Kansas City to an unnamed New York investment firm for a substantial $113 million. This portfolio includes 4 multifamily communities, each boasting occupancy rates above 92%, highlighting the strong demand in the Kansas City area. According to a report by the Kansas City Business Journal, the properties are located in suburban areas, which are increasingly attractive to investors due to their high occupancy rates and stable rental income potential. This transaction reflects a broader trend of institutional investors seeking opportunities in suburban markets, which offer both stability and growth potential. The Kansas City area has become a focal point for such investments, driven by its robust economic fundamentals and the appeal of suburban living. As investors continue to seek out these high-performing markets, the transaction underscores the strength and resilience of the multifamily sector in suburban settings. With suburban markets experiencing rising demand, this sale further emphasizes the attractiveness of multifamily investments in areas outside of major urban centers. As housing affordability remains a pressing concern in many cities, suburban markets offer a viable alternative with competitive rental rates and strong economic prospects. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy McKee. See you on the next one.